The next part of the syllabus we'll be dealing with is borrowing costs. It's a very interesting topic, and it has to do with non-current asset as well. That's why it's part of the sundry standard on non-current assets. Now, what is the objective of this IAS 23? The objective of IAS 23 is to prescribe the accounting treatment for borrowing costs, because sometimes we are borrowed to either build an asset or acquire an asset, and we need to know under what are the terms and conditions that we need to meet before such a borrowing cost is expensed or capitalized. Can we even capitalize it, or should we have to expense it? If we can capitalize, what are the criteria for capitalization? These are the things we want to examine here. Borrowing costs include interest on bank overdrafts and borrowings, finance charges on finance leases, and exchange differences on foreign currency borrowing, where they are regarded as an adjustment to interest cost. These are what we call borrowing costs. Borrowing costs may include any of the following. Number 1, interest expense calculated by the effective interest method under IAS 39. 2, finance charges in respect of finance leases recognized in accordance with IAS 17 leases. 3, exchange differences arising from foreign currency borrowing to the extent that they are regarded as an adjustment to interest cost. Those are the things that we can refer to as a borrowing cost, a combination of them. This standard does not deal with actual or imputed cost of equity, including any preferred capital not classified as a liability pursuant to IAS 32. So purely, we are not talking about cost of equity or cost of preferred capital. We are talking about pure borrowing to finance an asset acquisition. Now, a qualifying asset is an asset. Qualifying asset, what do we mean by qualifying asset? A qualifying asset are those assets that the related borrowing cost can be capitalized. What are the assets that qualify for the capitalization of borrowing cost? Because not all assets. A qualifying asset is an asset that takes a substantial period of time to get ready for its intended use. It's not what you go and buy over the counter. No. That could be property, plant, and equipment, or it could be an investment property during the construction period, intangible asset during development period, or made to order inventories. Those are the type of non-current assets that are eligible for capitalization of the related borrowing costs. So for an asset to qualify for capitalization of its respective borrowing costs, it has to be an asset that takes a substantial period of time to build, and for anything to take a substantial period of time to build, it will either be a property, plant, and investment, and equipment. It can be an investment property that is constructed over a period of time, and it can be an intangible asset during a development phase when you are trying to develop a product or service. Now, for the scope of IAS 33, what does it cover? Two types of assets that would otherwise be qualifying assets are excluded from the scope of IAS 33. 1, qualifying assets measured at fair value, such as biological assets accounted for under IAS 41 agriculture, is completely out of here. 2, inventory that are manufactured or otherwise produced in large quantity on a repetitive basis and that take a substantial period to get ready for sales. So that's equally not included as part of things that are covered here. Now, accounting treatment. On what basis do we recognize a borrowing cost? Now, borrowing costs that are directly attributable to acquisition, construction, or production of a qualifying asset form part of the cost of that asset and therefore should be capitalized. But two things: it must meet the definition of what we call a borrowing cost, and we've mentioned it earlier that anything that has to do with cost of equity or cost of preferred capital is not a borrowing cost. It has to be a pure borrowing from a third party. Also, another thing is it must be borrowing for a qualifying asset. What are those qualifying assets? Qualifying assets are the assets that take a substantial period of time to get ready for intended use or sale. So, which are purely PPE, or an investment property that takes a significant period of time to build, or an intangible asset during their development stage. Once the development stage is completed, you can capitalize again as well. Now, so apart from the borrowing costs relating to the acquisition, construction, and production of a qualifying asset that should be capitalized, other borrowing costs should be expensed. Now, measurement. Where funds are borrowed specifically, costs eligible for capitalization are the what? Actual costs incurred less any income earned on a temporary investment of such borrowing. How do we mean? Is that when we borrow to build, it doesn't mean that, say for instance, we borrow $5 million to build or to do a research and development. We are not using everything at a go. It's not that you spend the $5 million in 1 week. No, you need the money on a gradual basis. But of course, you take the money in a lump sum. You don't take on gradual. So when you take the $5 million today, you know that in the first 6 months, you only need $500,000. You can invest the $4.5 million in a short-term security that can quickly be converted to cash when you need the money. So essentially, it means there's a borrowing cost and there will be an investment income when you invest the fund on a short-term basis. So when you want to capitalize, you only capitalize the excess of the borrowing cost over and above the investment income on the temporary investment of the fund. So where funds are part of a general pool, the eligible amount is determined by applying a capitalization rate to the expenditure on that asset, which is when we borrow large sum to finance quite a number of transactions. So we know the cost of borrowing and we know how much we expend on a particular asset. So it is that the cost of borrowing on what we spend on that asset, a particular asset that will capitalize, not the general pool of borrowing that are used for other transactions. Now, the capitalization rate will be the weighted average cost of borrowing applicable to the general pool, because that general pool might have different funds going in there that have a different cost. So you don't know what you have. Say for instance, you borrow one at 12, one at 14, one at 17. You can't say this is the one that I spent on this, a general pool. The money come and go out of there. So it's a weighted average of all these costs that you apply on the amount that we have spent on a particular asset to determine what you capitalize for the asset. Capitalization should commence when expenditure are being incurred. Borrowing costs are being incurred and activities that are necessary to prepare the asset for intended use or sales are in progress. So it is when you start that you can only capitalize from the point of building up to the end. And when the standard also says that when there is a substantial stoppage, that capitalization stop, whether it's a temporary. Say for instance, you build from January to June, then you relax from June to probably November. You don't capitalize from that June to November. So you only capitalize over the period you have actually effectively been constructing the asset. Now, we also the capitalization should be suspended during period in which active development is interrupted. Capitalization should cease when substantially all activity necessary to prepare the asset for its intended use or sales are complete. When you complete, capitalization ends. Now, if only minor modifications are outstanding, this indicates that substantially all activities are complete, then you should stop capitalization. So, where construction is completed in stages, which can be used, where construction of other parts continue, capitalization attributable borrowing costs should cease when substantially all the activity necessary to prepare that part is completed. Now, on the disclosure, what are the things we should talk about? Amount of borrowing costs capitalized in the period should be disclosed. We should usually disclose the capitalization rate that has been used. These two items are very important. Sunwave IAS 40, that's a 40 investment property. That's another one we'll be looking at shortly. Now, for investment property, I would like you guys to do a bit more of work, but the key thing that you should know is what I'm going to try to mention here. What is investment